What's up, everyone? It's Scotty with Money Investing. So it's all going to come down to this one company. At the end of the day, it's always about this one company, which is going to make or break the market. Because of the resistance that the S&P and the Nasdaq are now at, it's going to be really, really important for us to understand how this company reports, what the guidance is if they provide one, and how the market should react to the earnings from the most valuable company in the US, arguably in the world, publicly traded company, and that's of course going to be Apple. So hope you guys enjoy this video and find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. Link to our Discord and Patreon is going to be down below if you're interested in joining. Of course, getting access to all the binds alerts, options alerts, trade ideas, and of course the private live streams. Everything's going to be included, and the first week of the month is the best time to join, so link's going to be down below. So first things first, let's just quickly dive right into the earnings expectations. And the EPS for tomorrow is going to be $1.42, which is going to be a slight decline on a year-over-year basis. And revenue expected at just under $93 billion, which is going to be roughly about a 4% decline on a year-over-year basis as well. So we know that, non-essential, non-discretionary items, the phone, the MacBook, all those things are really just those items that people really want, not necessarily need. So these are items which in a recessionary environment do start to slow down in terms of consumption. We've already seen the MacBook sales come down 40% lower in terms of shipments in the most recent reports. But Apple is constantly buying its shares back. It's one of the very few companies that plows billions of dollars into share buybacks every single year into its own stock. So as a result, it's going to be quite interesting. I mean, they are expected to announce another $90 billion share buyback program, which is obviously going to be pretty substantial. But a few things that I want to point out for the market is that the S&P 500, like I said, is at a very critical area of resistance. As you can see, they were already at this level at 4182. And it doesn't take a genius to really understand why the markets have been moving higher, right? It's all because of the concentrated rally in tech. And more specifically, Apple and Google and Microsoft and Meta, like these being perceived as more safe havens as anything else. Of course, there's a case to be made for Microsoft with AI, Nvidia with AI, Meta with, of course, cost cuts and the undervaluation that was at back in October of last year. But with Apple, the valuation's a little too high. There wasn't any significant announcements that could have really resulted in this 25-30% rally. In my opinion, it has very much to do with concentration and investors really looking for safety and certainty in an uncertain environment. And as a result, you've seen Apple, up a little bit over, I think, 25 to 30% on a year-to-date basis, 28.5% to be precise. And from its January lows, it's rallied a little bit over 35%. So absolutely incredible gains. And it's obviously gone up to a level now where we're starting to see a bit of a negative divergence formation. And then not to mention that incredibly overbought conditions for Apple as well. Now, NASDAQ is in a very similar situation. So you can see the S&P 500 and the NASDAQ, they're both at a very critical area of resistance. And not to mention that RSP is nowhere near close to its resistance from the past, as seen back in December and, of course, June as well. So going back over to Apple, there is going to be a resistance all the way up to 176. So this right here is going to be that level to watch. And even if Apple does report some good numbers, and again, the focus is going to be on actual sales for iPhone, MacBooks, iPads, and of course, watches, accessories, all those different things, year-over-year growth comparisons, and then of course, services business as well. How well is Apple services doing? And we'll take a look at the margins, and Apple has not really provided us any guidance since COVID began. So I'm not expecting a lot of color on what the future looks like for Apple in the remainder of fiscal year 23. So guidance is going to be out of the question, but the main focus obviously is going to be on the main core business, which is hardware, and then services, and then margins, and then a little bit of insight into VR, AR headsets, if that is something that Apple's planning to launch, because they're going to be competing with Meta on that front as well. But from a technical standpoint and even from a valuation standpoint, right now Apple trades at around 6 to 7 times sales, not to mention 28 to 29 times earnings. But the growth rate for the next 5 to 10 years is pegged at under 9%. 8 to 9% is what the long-term growth for Apple really is in terms of earnings. If you take into account the share buyback, which Apple is again plowing billions of dollars back into the company, then the growth rate jumps to 12 to 15% because they are very aggressive in these share buybacks. And that's one of the ways to manipulate your earnings per share at the bottom line by buying back your own shares and, of course, reducing the supply in the open market. So, but that being said, for me, fair value for Apple sits close to $120 to $130, considering that long-term growth rate. And right now, from a weekly, standpoint, you'll notice a weekly chart, RSI is at over 61, 62 levels, with the MACD also incredibly high at the moment. Not really overbought for the RSI, but the MACD certainly is. And even if we do see some more momentum, some more upwards, momentum for Apple, the highest I could get it, see it going up to is 176. So this right here is going to be that level to watch very closely, and that's about the high I could see for Apple, and that's going to put us back over $2.7 trillion in market cap, getting very close to $3 trillion. But if you do start sliding lower, that's obviously going to break the market and its strong footing and the strong rally that we've seen, and obviously put the Nasdaq and the S&P back towards a potential downtrend, and we're going to get rejected and start to rolling right back over. So really it comes down to this company, make it or break it moment for Apple. Let me know your thoughts down in the comment section below. I think the sales and the EPS expectations have been revised down, so it's not unlikely for them to beat on these numbers like many other companies have. But year-over-year numbers on an absolute basis, we're still going to see declines. And like I said, the main focus is going to be on the margins, the services business, the core business, the hardware business, and of course the future guidance if Tim Cook can provide us with anything. So again, hope you guys enjoyed this video, find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel. If you're just joining us for the first time, the link to our Discord and Patreon is going to be down below if you're interested in joining us. Of course, getting access to all the binds alerts, options alerts, trade ideas, everything's going to be included. And as always, happy investing. I'll see you all in the next video.